On this next question, I'll put the slide up that you've sent me in terms of the customer journey if they're buying in Australia, and you've got the JLL sort of 10-step guide that buyers go through. But very quickly, in terms of if you're a new buyer to the market and you come in, what is the process that you go through from sort of start to finish in terms of acquiring a property in Australia? What steps and hurdles do you need to go through?
Yeah, look, the first thing is obviously working together with someone like yourself, Ludo, and Jones Lang. So make sure you're working with a reputable and licensed real estate agent. So Jones Lang, we are licensed to operate in most of the major markets in Asia, but also in Australia, which is the important part of it. Because as a licensed agent, we'll always be doing a due diligence on all the properties that we might suggest to a prospective buyer. So that's the first thing that I would suggest. The second is, of course, that before they even start the journey, they have a chat with a mortgage broker. A lot of the mortgage brokers work underneath major accounting houses. So we would suggest that that's a really important element so the buyers can understand the tax implications when they buy, but two, what their borrowing capacity is. We have buyers who come to us and say that they're cash buyers, and the first thing we would always say is have a quick chat with the accountant because, as I just discussed, negative gearing, there's a lot of benefits to buyers not paying cash and obviously borrowing money. So that's the first thing before they start the journey. Make sure you're dealing with licensed professionals throughout the whole process. So let's say, for example, you've now found a property that you like. The reservation process is really straightforward, similar to other countries like the UK. Australia has a centralised land registry and regulatory group that oversees all property transactions. So that's really good. Once you fill out a reservation form, generally speaking, you say you're buying $1 million property, you fill out a reservation form, you sign it off. The reservation fee tends to be about $5,000. Most of the time it's refundable, but as soon as you reserve an apartment, that reservation form will go to your solicitor that's representing to you, who will share that with the developer's solicitor. The developer's solicitor will prepare a contract, which will then go out to the buyer and the legal representative that they nominate. So all buyers will have their own legal representative. Everything is done by DocuSign. So there's, the buyer's legal representative will send them that contract by DocuSign. They'll do a Zoom call similar to this and spend, 20 minutes up to, as long as required to go through the process, sign off on the contract, which will then go back to the developer. Once the developer's happy that the contract has been executed properly, they will send out a request then again, it's government regulated, a 10% deposit to be paid. The buyer will pay that 10%. The 10%, again, being government regulated, will not go to the developer. The developer cannot use the 10% deposit. Let's say it's a 2-year build. If they're buying off the plan, the developer cannot have any access to the buyer's 10% deposit. They're protected by the government. That money has to sit in the developer's legal team's trust account, and it can only be released to the developer once the developer completes the project. If the developer, for whatever reason, cannot complete the project, the worst case scenario ever for the buyer should be that they get that deposit back with interest. There's no other scenarios unless the buyer agrees to something alternative to that, but that's the standard. So let's say after 2 years you pay 10%. Generally speaking, when you're getting to about 3 to 6 months before completion, the buyer should go back to the mortgage broker that they spoke to in the first place, work out what the most attractive loan is for them, and then obviously they'll complete with a mixture of cash and money from the bank. And then the stamp duty. So the stamp duty is determined state by state. So, for example, in Victoria, buyers only pay stamp duty on completion. In New South Wales, it has changed a few times, but you tend to be paying the stamp duty within a 12-month period. But that's something which we just need to look at on state by state, because obviously it affects your cash flow process. So they're the main They're the
And
main
and you
things.
mentioned, just one quick follow-up question. You mentioned in terms of lenders and mortgages as well, obviously very easy for overseas buyers to get lending. I know they can get up to 80%, and certain banks up to 90% for some Australian sort of non-bank lenders, depending on where they're based. But obviously I know yourself and we do as well, partner with some great operators who can go out and do that. But in terms of sort of headline figures at the moment, have you got a sort of idea of what type of lending people can get?
Look, this is a moving feast because it does change a lot. What I would say to you is that the mortgage brokers are saying to me that it's got a little bit more difficult for overseas buyers recently, just because the banks are trying to take into account what rate reductions are happening. But if you're in Australia at the moment, the banks are having a full all-out war um, because buying activity is increasing really rapidly because there's been three rate reductions. So I think they're just playing a wait and see in terms of what the impact is on lending. But the most important thing is if you're a bank in Australia and you're looking at the figures which are coming out about the growth in asset prices, because you've got to remember the risk to the banks is buyers defaulting on properties. But actually, the most important thing to them is that the value of the asset that you're buying isn't going down in value. So just going back to the numbers we talked about at the beginning of the webinar, across Australia, regionally and by city, prices have been going up across Australia for the last 2 months. So all major markets in Australia are moving in positive territory. So then it comes down to buyers when they are buying, being able to service their debts. The banks are regulated to stress test buyers. I think it's a 3% buffer. Um, they're very low, it's like 1% defaults of mortgages in Australia. So the banks are in a pretty good position. To answer your question, look, the numbers I'm seeing for foreign buyers at the moment is, 80 up to 80%. But I personally, if I was a buyer, and if you're thinking about investing in a property, which say, for example, is for yield, I would always be thinking about 60. I'll say this to buyers who come in and meet us in our office. If they say that they want to borrow 90% or 80%, I'm always saying to them, listen, you should be really thinking about it at 60 or 70% maximum, because it does change over the course of time. So if you know hand on heart, when you're going into a commitment, that perhaps you're looking at it 60 or 70%, even though you might be able to get 70, 80% loan, I would always be very cautious and conservative.
No, I agree 100%. Okay, so finish up, final question in terms of forecast, the ultimate question. I appreciate you don't have a crystal ball, but forecast for property pricing, let's say over the next 1 year, 5 years, 10 years, where are you seeing prices going and your take on that?
Yeah, okay. So listen, we don't issue forecasts. But I have dug up a couple of forecasts which I've shared, which you can share with your viewers later. So KPMG, before there was any rate cuts this year, so in January, they did forecasts for both houses and apartments on the assumption of no rate cuts. And so for each of the major capital cities, they were talking between 2% to 3.3% in 2025, assuming no rate cuts. And then in 2026, Sydney, for example, they were looking at 7.8%,
Yeah.
6%, or across the board, 5 to sort of 7% in terms of forecasts for next year. That's for houses. And then for apartments, even stronger growth. And again, I'll share, that's in a chart which I've shared with you.
We put that
Now,
on the screen.
so that's KPMG. Then Square Meter Research, which is one of the biggest research houses in Australia, actually did some forecasts which were on the basis of some rate cuts back in January this year. They, on the basis of just one rate cut in March, which happened, there's been two since then, across the board, um, we're thinking double digit in Perth, Brisbane, and Hobart. Then most of the other major capital cities, they were around that 5% mark. So 6 to 10% for next year is the overall consensus from most of the commentators, which is pretty positive territory. But I can tell you already this year, if I look at the KPMG forecasts, most of the capital cities are well ahead of what they forecast.
Yeah, no, all looks positive. So, I mean, I
So
think
I'd say 5 to 10%. So I would say across the board, 5 to 10% in most of the major capital cities. And definitely Melbourne is the one I'd be really looking at in terms of if you're really looking at trying to get into the market off a low cost base where the gap between Sydney and Melbourne prices that are historic highs, that gap is probably where I would see the capital gain is that I can get. And the most important thing is anywhere you buy in a good location in Melbourne, like all major capital cities in Australia, the rent is very strong.
I think that's the key takeaway is just to wrap it up in terms of rental market in Australia is doing very well. Void periods are really, really low across the board. Obviously the capital appreciation growth in all the major cities is looking very, very strong. So you're buying for long term. You're not necessarily going to get the highest yield, but the growth is there if you hold those properties for a considerable period of time. And then you've got the security of buying into Australia where it's a secure, safe, reliable investment. You know, when you put money in, especially if you buy something off plan, it's going to be protected and backed up by numerous sort of initiatives that are in place to protect investors putting their capital in, which is good to see. And there's still some of those opportunities in Victoria and Western Australia to save yourself a bit on stamp duty as well. So potentially some opportunity there. But Darian, I appreciate your time. Thank you very much.